Hi there, I'm Paul Waldie, and I'm joined by Kurt Reiman. He's a global investment strategist with Blackrock Asset Management. And Kurt, we got to talk about all this market volatility. It has been a horrific start to 2016. What are you telling your clients?
Well, one is not to capitulate. The second would be that if there is a lot of value in the market, you have to be careful that you're not catching a falling knife. So there's places like energy, materials, commodities, cyclical countries, emerging markets that all stand out as cheap. We're not yet at a point where we're aggressively buying them or moving to overweight positions, but we are staying the course in places where there's profit growth and better economic growth and just less overall uncertainty.
Where are the sort of safe havens, if you will?
In the bond market, there are safe havens in the nominal government bond space, right? That's one place that you can go to in times of stress. In the stock market, less so. Investors are going to favor defensive sectors, but the problem there is that those sectors are rather expensive. Everybody enjoys safety in times of strife, right? So defensives like utilities, consumer staples, those sectors are rather expensive. We favor more cyclical exposure in financials, technology, and consumer discretionary. That's where we think that over the course of this year, either where profits are going to be better, these are companies with more visible cash flow.
Okay. And now globally, because we're talking not just Canada and the US here, globally, it's a really murky picture, isn't it? You've got the US kind of going one way, maybe Europe going a different way, China obviously a big factor here. How do you weigh what's happening outside the US?
Well, with such a high exposure to energy and materials in the Canadian stock market, I think it makes a lot of sense for Canadian investors to look overseas for returns. You've got profit growth in Europe. They're earlier in the business cycle. There is a central bank that's giving ample accommodation. The same thing can be said for Japan, where there's profit growth. And in addition to that, there's money on company balance sheets, equivalent to 50% of the market cap that companies are paying out. They're repurchasing shares. They're increasing dividends. And that's what we like. So economies where central bankers are giving a little bit of lift, the currency has weakened somewhat, where the economic data is surprising the upside, markets are cheaper. Those are the areas that we like.
All right, Kurt, we've got to leave it there. Thanks for joining us.